Welcome to the B.F. Anderson Technical Report for September the 15th. I wanted to kind of go back to February of this year and remind everyone of a rule that was observed by my friend Mike Centolo with Cabot Research up in Salem, Massachusetts. If you look at this point right here, this is where we had a blast-off indicator called the 7.5% rule, which is, and I'll read my notes here, the 7.5% rule is when the S&P 500 closes 7.5% higher than the moving average, which is the 35-week moving average. This signal must be the first one for 9 months. It's only happened 10 times since 1980. The average gain that year is 15.4%. But I think the more important factor is that once you get the blast off, you tend to get a multi-year bull market. So that's what we're hoping for here. But the corrections have been very minor. We had one correction after the blast off indicator, but then we resumed the uptrend and actually making new highs. I wanted to talk a little bit about emerging markets because recently Jim Chanos, a hedge fund manager, was discussing the fact that if all this is about, meaning that the markets are hitting new highs, is about the election, the presidential election or Brexit, then why is it that worldwide markets are making new highs as well? So that's a good point. Now, if you go back 20 years on the emerging markets, you can see that, going into the financial crisis, that there was just a tremendous drop. Then we got a recovery, but the emerging markets have basically gone nowhere since 2006. So we're breaking out to the upside, and as I sit back and look at my model portfolio, which we use a model portfolio, we're doing very well in international investing. We have one investment in China that's doing well, actually two, and then we also have one in Latin America that is doing well. So, it's funny how the masses all move in one direction, but with the recovery, and here's the NASDAQ showing the NASDAQ, with the recovery that we've seen since 2009, there has been a tremendous movement to index funds, primarily S&P 500 index funds. But where the market's probably going to fool everybody is that it's not going to be the S&P 500. It's going to be something else. Is it international investing? I don't know. Looking pretty good to me. But also look at the NASDAQ. I mean, since the blast-off indicator, the NASDAQ has broken out of a 20-year trading range and is really making some very good progress and making all-time new highs. The NASDAQ looks very constructive. Now let's get into the top 5 stocks that made our screens this week. Again, Align Technology continues to make our filters, and you can see that the moving averages are very steady. The stock is in a really nice uptrend, hitting new highs. Again, internationally speaking, here's Alibaba, the Amazon of China. Look how smooth those moving averages, how nice that uptrend is. Stock just hit an all-time new high. Now, last week we had a new stock come onto the list, a company called Novocure. I've done a preliminary amount of research on this. They have a new technology. It's quite exciting. It's called TFF, and it has to do with brain tumors, where they are using electric waves, a device that interrupts, these electric waves interrupt cell division for cancerous tumors. So what happens is it interrupts the cell division, therefore it kills the cancer cell. So it really does appear that there's a lot of breakthrough technologies going on today that will potentially cure cancer. Now, back on our list is an old favorite, NVIDIA. Again, we're talking about artificial intelligence. We're talking about, autonomous automobiles. This is a semiconductor company that is doing quite well. Another stock that continues to do very, very well is Shopify. Now, this is a e-commerce investment where we're seeing a tremendous amount of interest in things like Alibaba, Amazon, so forth and so on. This company, what they're basically doing is providing a software platform that allows mom and pops to come back after Walmart after the Walmart demise. But mom and pop stocks or mom and pop businesses, e-commerce businesses, are coming back using Shopify's platform. Now, I wanted to point one thing out. I saw an interesting survey recently having to do with millennials. And I've got a graph here of a company called Simon Property Group, which is a retail real estate investment trust. Now, they primarily own shopping centers and malls. So as we see the e-commerce world starting to unfold, we're starting to see really a strong downtrend here in anything to do with real estate, especially shopping centers and malls. But I think something that I'm hearing that is quite interesting and could be a disruption of the real estate market. The millennials were asked in a survey done with millennials, that they would rather go to the dentist than go to a bank. And what's happening, I believe, is that there is a disruption of the banking industry. And what I'm hearing is that in the not too distant future, you're going to start to see where banks are going to start closing branches. So what does this all mean to the real estate industry? I mean, are we going to end up with a glut of real estate out there? I heard the other day that a mall in Baton Rouge is up for sale, an old mall that's been here for a while. And I mean, it's like $2 million for this mall. And I mean, there's houses here in Baton Rouge that sell for $2 million. So I just am interested in keeping an eye on the real estate investment trust. I kind of think it's an area that will tell you what's going to be happening with real estate in general. And I don't think it looks very good. So let me know if you have any questions. Thank you very much.